Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Monday, October 11th, 2021, and I am pre-recording this Trading Places Live for Tuesday, October 12th. Futures currently look to be ready to extend losses. Dow Jones futures currently down 104 points, S&P 500 futures down 14.5 points, NASDAQ futures down 51. But of course, this is Monday evening, and we'll have to wait to see what happens overnight. By the time you're listening this Tuesday morning, things could have changed. But at least for now, here in the evening, it does look like the selling that we saw throughout most of the day on Monday is set to continue on Tuesday morning. And that is as we prepare for the start of Q3 earnings season, which will get kicked off on Wednesday when we get the likes of JP Morgan reporting their quarterly results. So get ready, fasten your seatbelts, because earnings just around the corner. Before I get into today's show, let's go through the agenda for today. So we'll start off, as we always do, with the daily market recap, then talking technically. Max Pain, this is option expiration week, and Max Pain's a big deal for us at Earnings Beats. And I'll go through some of what we talked about on or for Max Pain the last 2 months. And then tomorrow afternoon at 4:30, Tuesday afternoon, we will be hosting our October Max Pain webinar. But you do need to be a member at Earnings Beats. You can start a no-cost trial and join us. But Max Pain's a big deal. I think you'll enjoy that segment. Then Earnings Spotlight, and we'll wrap up with the 3 you must see. But before we get into any of that, let's go over to earningsbeats.com. If you are new to Earnings Beats, go to our website. You can scroll down and you'll see we have a free Earnings Beats Digest newsletter. All it requires is your name and email address. No credit card, completely free. You can unsubscribe at any time. This is a newsletter that I write 3 times a week, Mondays, Wednesdays, and Fridays. Usually it's just one basic topic, might be an individual stock. It could be a sector, whatever. But normally just a couple of paragraphs. I tend to focus a lot on relative strength, earnings, the gaps related to those earnings, candlesticks, do a lot of price volume analysis. Those are the types of things that we find to be most important at Earnings Beats. So that'll help you maybe get up to speed a little bit with how we look at the market. And I think it'll add to your own trading repertoire. But again, just name and email address. That's all you need. And you can subscribe and join our growing community. All right, let's move on to the daily market recap for Monday. It was Columbus Day. The bond market was closed, but stock market was open. And probably a lot of traders wish that it wasn't, because it was not a very good day. We started off pretty solid, mostly in the green, but throughout the day, the selling picked up. You can see the Dow Jones finished the day down 250 points, S&P 500 down 30, NASDAQ down 93, all of them on a relative basis about the same, right around that 0.6% to 0.7% drop. Mid caps fell 14 points, or about 0.5%, and small caps down 9 points, or about 2/3%. Moving on to the sectors, real estate, one of only 2 groups that were higher, and barely. The XLRE was up 0.13%, so 6 pennies to 44.68. Didn't really do anything to help its chart. It's been downtrending. It's below its 20-day, which is below the 50-day. So even today's gain was not anything to write home about. But on the downside, we had 3 different sectors that were down at least 1%. Communication services down 1.51%. Utilities down 1.36%. Financials down 1%. The first 2 you can see easily in a downtrend. Failure at the 20-day moving average and trying to break down the new lows. I mean, that is the poster child or poster children of a downtrend. So until we see the action climb back above that 20-day EMA, I think we got to be a little careful. And that honestly is what's wrong with the market right now. I think we just continue to trend below that key moving average. Financials, on the other hand, even though we were down 1%, we actually were at an all-time high. earlier in the day. So in the morning when financials were doing well, the market was doing well, everything looked great, but we did finish very weak and left a long tail, false breakout to the upside. I think this is setting up at least for a 20-day test to the downside, and then we'll see from there. Did want to point out that renewable energy strengthened, and you can see getting pretty close to some recent highs. This 240, 250 area has been a little difficult to negotiate. I would say even 255 is a level that I would be watching. If we can break out above that, this is a group that tends to move very fast, so you do want to keep an eye on it. But I don't want to see failures. I want to see that actual breakout before I would think about getting any more aggressive with the group. All right, 10-year Treasury yield. I do want to mention not a whole lot going on in terms of economic reports on Tuesday, but on Wednesday, we'll get the September CPI and September core CPI. And August, if you recall, numbers were pretty tame. August CPI was a rise of 0.3%. Core CPI for August rose 0.1%. In September, we're expecting roughly the same numbers. That headline number looking to rise 0.3% in September, which would be the same as August. And the core CPI number expected to rise 0.2%, slightly more than that August 0.1%. So that's coming up on Wednesday. Still a lot of inflation talks. So the market will be looking at these inflation reports pretty closely. All right, but that's it in terms of economic news. So the market, without a whole lot of earnings coming out, even once we start getting a few of the big reports, there are not going to be a lot of companies reporting this week. Next week, things will pick up a little bit. The following week is when we're really going to start to see the earnings reports pour in. So not a whole lot of news here the next day or two. We'll see what happens with the market. But typically, when there's not much news and the technicals are weak, that doesn't bode well for the market. So just kind of play it by ear here and take it one day at a time, maybe 1 hour at a time, and see if our moving averages can get back up through, or excuse me, our major indices can get back up through those key moving averages. All right, moving on to talking technically. Bond market, by the way, was closed on Monday, so no action there in the 10-year Treasury yield, but we are still uptrending. Moving on to talking technically. First, I wanted to show you the S&P 500 here on the daily chart. So I said we were downtrending below the 20-day moving average, and you can see we keep failing, trying to get through. There's also this gap resistance right here from back on September 28th, and that number is, that open was at 44.1954. So we need a sustained move and a close back up above 44.20. Until we get that, and 50-day moving average is 44.37, so not much above that key area of gap resistance. So those two numbers is what I'd be watching to the upside. To the downside, the recent low close was 4,300. So I'm going to say we're between about 4,300 and maybe 4,440, roughly, something like that. And I think that's our trading range for now. If we go back down, we close below 4,300, then I think we're opening up the possibility of another move to the downside. But for the, in the meantime, I would just treat this as sideways consolidation. All right. That's the daily. I wanted to pull up the hourly on the S&P, because on the hourly, you can see we had been downtrending. The PPO was starting to turn higher, so we had some positive divergence. We did get through recent highs. We broke out, looked like, okay, maybe we're going to start trending higher. Well, second half of the day kind of squashed all that. We couldn't hold on to the 20-hour EMA, couldn't hold on to this gap support level here, couldn't hold on to the bottom of gap support. We ended up closing below that and finished right on the 50-hour SMA. 4360 is the 50-hour. And we finished at 4361, so 1 point above it. So that's kind of the last hope. Below that, I really don't see a whole lot of support until we get down to that 4300 area. So tomorrow, if we get off to a rough start, we could see selling accelerate. I wouldn't be surprised. The NDX, or the NASDAQ 100, we're looking at the 1 hour chart. We did the same thing, except here we actually broke and closed below the 50-hour SMA. So the overall downtrend remains in play. I mean, we could drag this out about 3 months, and I think you're going to see the downtrend that's pretty much marking the NASDAQ 100 over the past 6 weeks or so. We topped in here with that double top in early September, and really just the selling just continues with lower lows and lower highs printing. So I'd like to see us get back through solidly through 15,000 on the NASDAQ 100. I'd feel pretty comfortable at that point. To the downside, though, finishing weak on Monday, I think that could open up to some selling on Tuesday. And if we do, continue to weaken overnight with these weak futures so far, we could be on our way, perhaps, to going down testing those recent lows. You can see the low here, 14.4, the low over here about 14.450. So we got a couple of key lows that we're going to have to kind of watch and make sure that level holds. Also here in the talking technically, I wanted to show you that renewable energy chart. Because this is a group that's a lot like the semiconductors in terms of their quick movement to the upside. I mean, sometimes they get going so fast, you don't want to jump in and feel like you're chasing, but they just seem to never come back down. And the same thing to the downside. I mean, you can see the renewable energy, when it started dropping, it didn't really do a whole lot of bouncing. It was pretty much just straight down. That was from 420 down to 220 in about 4 weeks. I mean, almost a 50% haircut, the entire index in 4 weeks. And it kind of settled down, went a little bit lower, and it's been going sideways for a while, but this is that 255 area I'm talking about. Haven't been able to be able to negotiate it. We were up to 249.81 on Monday. So watch this area, because if we do get a breakout, this could be significant as we head towards some of the company's earnings reports in this space. So just wanted to point out the renewable energy. And one of the stocks that I think looks interesting in this group is First Solar. So First Solar topped in January, came back up, pretty much tested that same level just about a month ago. And then today at its high was getting close to that level again. So, we're looking here at this January high, and we're almost there. If we go back to that renewable energy chart, here was the high in January and February. And look at where the index is, nowhere near that high. And yet First Solar is not too far from breaking out. So I think you've got a leadership here in First Solar. So if the renewable energy breaks out and you see First Solar break out, this would be one of the stocks I certainly would be considering investing in. Now it is an aggressive trade. I want to point that out. So you got to be willing to take some additional risk with a stock that's as volatile as First Solar. But it's one that could certainly provide quite a return as well. All right, let's move on to Max Pain. So with Max Pain, what we do is the options expire the third Friday of every month, which is this Friday. It'll be this Friday, October 15th. The last 2 months, and every month, we have a webinar on the Tuesday afternoon after the market closes. It's always the Tuesday before the third Friday. So it's 3 days before options expire. And the reason we do that is we try to alert our members as to stocks that could move up significantly or down significantly based on the number of outstanding or open interest option contracts that are out there on both the call and put side. So a stock that's been going up a lot, that's heavily traded in options, you tend to see a lot of in-the-money call premium as you approach options expiration. And you've got to be really careful, because market makers have a financial incentive to begin selling or trying to drive the price of that stock back down just temporarily to relieve itself of its obligation on all of those in-the-money call premiums. So, and the flip side for a stock that's going down, you get a lot of in-the-money put premium. And so those stocks there's a financial incentive for market makers to drive those prices up, at least temporarily. So that's the whole premise, is we want to take a look at the major indices. We always look at the spider, we always look at the QQQ, and see where they stand, their current price versus what we consider the max pain level. And the max pain level is that point at which the in-the-money call premium exactly offsets the in-the-money put premium. So in a perfect world, market makers are completely, washed. They don't have any obligation net between calls and puts. So when a stock or an index has been going straight up, obviously there are going to be a lot more in-the-money calls, very few in-the-money puts, and therefore the pressure short-term would be to the downside. If we were going straight down, then it's the opposite. The pressure would be to the upside heading into option expiration week. So let me just go over some of these the last 2 months. So back in August, the spider on that Tuesday before options expired, that was the 17th, I believe, of August right here. There's the 16th, which is Monday. Here's the 17th. So we had closed at 443.09. The max pain point, now that's going to be the point at which we've got both the in-the-money calls and the in-the-money puts. They're offsetting one another. That max pain point was 431.31, which you can see is basically down in here. Now, we didn't go all the way down to that 431 level. I mean, you can see we didn't make it all the way down. We got to about 435. Actually, the low was 434.73. But we made a directional move, and that is what's key, because it's not like we have to get the 431 in order for market makers to, start offsetting losses. They offset some of their, the money they owe, their liability, every penny that the spider goes down when they're a lot of in-the-money, net in-the-money call premium. So it's just a directional move. I consider it almost like a gravitational pull to the downside, but only in the short term. And you can see we went down for 2 days, and then look, we were back at highs again another week or two later. So this isn't a long-term call. It's a short-term. This is for traders. It's not really for anybody who's looking from a longer-term perspective. So the spider, you can see, did pull back for a couple of days after we had our webinar and then started to move back to the upside. In September, when we looked at the spider, and this would have been on the 14th right here, we had closed at 442.75, and max pain was at 428.17. Now, over the next 5 days, now not just the 3 days into option expiration, but also into the early part of the next week. And I always get this question, well, why would that matter? If options expire on Friday, who cares about Monday or Tuesday? Well, if you have an option and you've got a call on the SPY, you can exercise. And if you exercise your option, the market maker, instead of being short the option, is now short the stock. So there's still a financial interest for it to continue moving lower. So I always talk about max pain, the effect, going not only through Friday, but I would say into at least the first couple of days of the following week. So if you look at the spider here, we were at 442.75 at the close on Tuesday. Max pain was 428.17. The low on Monday, 428.86. From 442, it went almost all the way down to the max pain point in 3 days. Pretty interesting. The QQQ is very similar for both August and September, so I won't go through and show you that. I want to show you some of the individual, couple of the individual stocks, though, that we talked about and how they worked out. So back in August, I'll pull up Fastly. So back on August, this would have been the 17th, Fastly closed at 40.96. And we talked about max pain being 46.66. So obviously there were a lot of in-the-money puts. And so it behooved market makers to take prices up. Well, Fastly, you can see right here, 1, 2, 3, 4, 5 days later, of course, 6 days later, it was even higher. But over these next 5 days, it got as high as 45.58. And maybe that was Wednesday. Maybe that is 45.58 on Wednesday. But that would represent an 11.28% move in 5 or 6 days. How about Las Vegas Sands? The same. We also provided this one in August. So on the 17th, it had closed at 38.64. Now, it did continue going down the next 2 days, by the way. So here we were down to about 36.50. before we finally reversed. But look at this reversal into the next week. We reversed back up. And on Tuesday of the following week, we were at 42.72, 10.5% higher than that 38.64 that we talked about. And if you happen to buy in during the additional weakness, it would have been even a higher percentage back to the upside. How about this one? PDD, Pinduoduo. So right here on the 17th, it closed at 79.45. And after moving down about $3 or $4, probably about $4 more over the next 2 days. But then look where it went to by Tuesday's close, or Tuesday's high it was, I think. 99.77 from 79.45. By the way, max pain on it was 106.04. Didn't go to 106, but it went up to 99 within a week. That was a 25% gain in 1 week. How about TCOM? So this is trip.com, ctrip.com. On the 17th, we closed. This one was nailed almost perfectly, 24.06 on Tuesday. And by the following Tuesday, we had gone up to 28.76. Max pain was 27.88. So we actually went a little bit above max pain. But that move right there, 19.5% in 5 days. Now in September, here were a couple of other longs. So Autodesk was featured as a long at 279.35 right here. And this one only 2 days later was 292. Max pain calc was at 306. So again, didn't go all the way up to 306, but it went up $13 in 2 days. How about Nordstrom, JWN? 26.59 closed on the 14th of September. Max pain, we indicated, was $30.53. Once again, 2 days later, 28.43, almost 7%. And then the last one, Plug, 24.66 was where we finished on the Tuesday, the 14th. Max pain, $30.77. But here we are, just end of the week on Friday, went all the way up to 26.53, about 7.5% gain in 3 days. I mean, these are the types of opportunities, and not every one of the positions worked, by the way. There were some that, well, I didn't take them all down, I don't think. Well, I can give you a couple here in September. I'll give you two quickly in September that did not work, because I don't want anyone to think that these are guarantees and that they're all just going to be wonderful. Atlassian Corp team on September 14th had been going up almost every day. So it had a lot of in the money calls. Max pain was 280, and the stock was at 389. Now, again, I wasn't looking for a team to go down 109 points in 3 days, but I was thinking the directional move would be the downside, but it went up. So if you're going to trade these, you got to at least think about having a stop in play at some point. I don't know what your threshold is. So while some of these other stocks I went over had opportunities for significant gains, this one could have been a pretty big loser from 389 up to 420. That would have been what, about 8%? That's if you timed it absolutely horribly and got out at just the wrong time. But still, 8% is 8% in a week. So there are some of these that do go the other way. All right, let's go into, let's take a look at earnings spotlight. And by the way, that max pain, that event is Tuesday at 4:30 for the month of October. So if you're interested, you'll need to go over to Earnings Beats and you'll need to take out this no-cost trial. It's 30 days. This one does require a credit card, but it's no charge. And if you can cancel anytime during your 30-day period, we'll even remind you before you renew after the 30 days. We don't want you to keep the service if you don't want it. All right. So let's move on to Earnings Spotlight. Just a couple of things I wanted to point out here. We had an event Monday evening. We call it our sneak preview Q3 earnings. And I went through a number of stocks that I thought looked pretty interesting on the long side. So I just wanted to share a few of those with you here. One was CMA, Comerica. You can see the stock recently just broke out, and relative to the banking group, it's at a 52-week high. So as these banks begin to report earnings here over the next week or so, a number of them, CMA, Comerica, looks like one of the strongest ones. I think it looks pretty good. Now, I wanted to also mention there are two railroads that are going to be reporting soon. I want you to take a look at the difference, the way Wall Street is treating these going into their earnings report. CSX, not too far from its recent high. And when you look at CSX relative to railroads, it's actually been going up for the last 3 months. Now I want you to look at Canadian Pacific Railway, which is CP. And you can see CP is much further off its recent highs. And when you look at the relative strength here, well, it's a lot of relative weakness down near 52-week low. So I look at these two stocks and I think Wall Street's favoring CSX over CP. And that's the way I approach the market. I expect a better report out of CSX than what we're likely to see out of CP based on how they're trading on a relative basis. One other one I want to mention, I'm really interested in this report, and this is Gentex Corp. And the reason I'm interested in this, if you go back here, I'm going to shorten this chart to 3 months. And I want you to look at all of these hollow candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 in a row. Then we had a little mix up here for 3 days, a little sideways action. And then 1, 2, 3, 4, 5, 6, 7 more hollow candles in a row. I think the stock is being accumulated. It's one I wrote about recently at Trading Places, my blog. And the other one that I mentioned at the same time was Opendoor Technologies. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 consecutive hollow candles. 1, 2, 3, 4, 5. It's on another 5-day winning streak right now. I think there's a lot of accumulation going on in both these stocks. And I think it'll be interesting when the earnings come out, because I believe Wall Street is accumulating both the stocks. All right, let's move on to the 3 you must see, and we're going to wrap this thing up. First is SoFi, which is SoFi Technologies. I like this breakout here. Big volume, 70 million shares, the most it's ever traded in a day since going public. And it took out this double top. So I think on any pullback, I would say even down to this gap support level, maybe even to the 20-day, I like the stock. So if we do fail on this breakout and come back down, I think it could present an opportunity. But I really like that hollow candle on that kind of volume. Nice trading day for SoFi. Next up is Cloudflare, Net. Now, I just talked about GNTX and Open, about all their hollow candlesticks. Look at Net right now. 1, 2, 3, 4, 5, 6, 7. 7 in a row, breaking out to new highs. I think there's more accumulation taking place here. Nice bounce back, and look at the AD line pointing up. I think this one looks good. And the last one I wanted to bring up is CTXS to wrap up the show. This looked like an exhaustion gap to me, and it opened that day down at 94.40. So as we move down here, I would look for some sort of reversing candle. If we go back below these lows, but then come back up and hold 94.40 on the close, that could be a bottom on Citrix system. So keep an eye out for that. All right, that's it for me. I appreciate you tuning in. I'll be back on Wednesday morning over at earningsbeats.com for your next Trading Places Live. Simply go over to earningsbeats.com, click on this Trading Places Live on Wednesday morning around 8:45 in the morning or up until 9 o'clock. And there'll be a link that'll be provided where you can come straight into the room. We'd love to have you. Have a great day, everybody, and happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.